Okay, folks, welcome to Thursday Night Stock Charts Live. What we're going to be talking about tonight is the battle between the White House and the Federal Reserve. I I got to tell you, I said this was coming, and sure enough, it's already here. The battle between the White House and the Federal Reserve has already begun. We'll take a look at what was said and how the dollar reacted and how the CME FedWatch tool predicts where rates will be 3 months and 6 months from now. So, the other topic we're going to talk about are obviously the weekly charts. It's Thursday, therefore, we're going to start off the uh, new trading week tonight. How do we do that? By analyzing how we're poised to close out this trading week to prepare for next week. We're going to start looking at, okay, if this, then that. If we close at the highs of the week this week, well, then we need to think about being long the market. If we fade, if we have a bearish reversal bar close lower on the week, well, we need to be thinking about shorting the market. So a lot to go through. First, we're going to kick it off with Texas Instruments and their earnings after hours. Now, Texas Instruments is down measurably after hours. The closing price was $200.61. Last tick 191.61. The lows of the after hours session at around 189.60. The anticipated market maker move on this news was, let's call it $10. So a disappointing number, but we're within the anticipated market maker move. Option sellers are going to make money. Options buyers, you're probably going to get crushed. So, and the reason why they're going to get crushed, despite even if they own put options, is because of IV crush. If they bought options that are going to expire tomorrow, they better get out really quick. Book those profits, whatever's left by tomorrow morning, and get out before the IV contracts. So let's talk about their earnings a little bit here. I took a peek earlier, and their guidance was a bit iffy, not great. They guide for EPS 94 cents to $1.16 and revenue of 3.74 to 4 million. The expectation is for a consensus average of 1.17. So even the high end of their range is below the average of consensus. No bueno. That is a technical term used on Wall Street. Do not use it at home. Be careful. Revenue, they're guiding for 4.06 billion. So they're expecting a better than expected revenue number than what the street was expecting, but they're not being rewarded for it. So that leads me to believe they are seeing margin compression and or, well, it's going to be the same. Their expenses are going up higher. Let's see what their results were for this quarter. They beat by a dime. Sales beat measurably. So their guidance was good. Excuse me, their earnings were good, but the street is a forward-looking mechanism. They're pricing in forward-looking earnings. And this is what I always say. This is an expensive market. Do these companies grow into their multiple? Now, on a trailing PE basis, yes, Texas will grow into a multiple and help support the current Schiller PE ratio. But the forward-looking guidance is going to disappoint, and we're going to become more expensive on a forward-looking basis. So we need more of these to influence that overall number, but not great on a forward-looking basis. Let's say hello to folks. Sean, thank you, sir. Should have checked that first. I always appreciate that. George, welcome. TZ Burton, welcome. Welcome all. All right, let's get to it. For those folks that are not current part of our current community, head on over, go on over and enter your symbols here where Sean and Lawrence have already listed their symbols. And I'll pop in the link. No credit card required. Hey, Corey. And put your symbol in right here. In fact, I'm going to be going over J-Bill. I don't want to forget it. So, and there we go. All right. Also, this show is going to be brought to you folks by TrendSpider, Automated Technical Analysis. If you're not using TrendSpider in the new trading year, you're missing an arrow in your quiver. You need to have this. This is the poor man's Bloomberg terminal. I use it all the time. So please take advantage of their advanced technical analysis tools such as algorithmic trend line detection, pattern recognition, the scans. They have awesome scans, alerts, back testing. If you want to know what Nancy Pelosi's doing, excuse me, just head on over here. What's happening now? Nancy Pelosi, what's she doing? Oh, look at this. Nancy's been very busy this week. Nancy is now long of Amazon, TEM, not familiar with that company. Tempest AI, okay. The Google, very busy, very bullish, Nancy is. VST, Vistra, NVIDIA, lots of NVIDIA buying. And she sold NVIDIA on January. I don't understand this. She sold NVIDIA and then she bought NVIDIA. What's Nancy up to? Anyway, you get this and you also get what the members of Congress are buying. What are they doing? What are these sneaky sons of guns doing out there? Where are they? Here, right there. Congressional selling. What are they doing? Keep an eye on them. And that comes with TrendSpider there. The version I'm using is the version I give away to our members. So if you want it for free, join up with me. 14-day free trial offer. Become a member. Link below. Blah, blah, blah. Let's move on. Okay. Economic data so far this week. We have leading indicators came out as expected. Jobless claims, they came out. I didn't even pay attention to this. They came out a little bit hotter than expected. S&P Flash U.S. Services PMI and the manufacturing PMI, they come out tomorrow. Keep an eye on those. Okay, so I've been saying for a while now that there was going to be a war between the Federal Reserve and the White House. How did I know that? Because it's happened before. It happened back in 2018. Go back in time, and when Powell was refusing to cut rates and was in a pause, if not a tightening mode, President Trump was slamming him in public, saying, cut rates now. He was behind the wheel, behind the curve. And Powell capitulated. The difference between now and then is tens of trillions of dollars in new debt that we didn't have back then. We didn't have interest payments that were above $1 trillion per year. We do now. We have spending, which continues to be obscenely ridiculous. And we also didn't have the level of inflation that we have back then. That we have now. So the landscape has changed a lot. So what President Trump is doing is he's presidenting pre-COVID when it comes down to monetary policy. And to appease Congress, he's probably going to appease them on fiscal policy. So what's he trying to do here? Does he not realize that what's going to happen is that he's going to stoke the flames of inflation? He knows that he's not going to get the blame. Ultimately, the Federal Reserve, and he's going to say this, if they do cut rates, and I don't think that they're going to, he's going to say they're an independent organization. I can't fire him until his term is over. They made the decision, and Powell knows it. He's not stupid. So we're going to talk about what I think the Federal Reserve is going to do. They will capitulate, but they won't do it in public because it's such a gamble. They can't do it. They can't cut rates, no matter what President Trump says, and we'll talk about it now. First off, for the first time in history, interest rates rose by 100 basis points while the Fed cut rates by 100 basis points. Let me put this into perspective. Okay, what does this mean? The Federal Reserve has control over very, very short-term rates. Not the 30-year debt, not the 20-year debt, not the 10-year debt. They control the overnight rate, the prime rate. That's what they control. So they cut short-term rates by 100 basis points. What was the reaction by the bond market? The bond market said, no way. Nope, not going to give it to you. We want more. You cut rates, you just put your own bonds at risk. Now we want to get paid more premium on those bonds for taking the risk of buying longer duration. Simple as that. It's capitalism. It's capitalism. Can't blame them. Moving on. Now the market sees less rate cuts. The Fed will pause, and the President Trump is demanding rates cut immediately. Well, if you're Jay Powell and you just cut interest rates, the short-term rates, yet the long-term rates went up, the exact opposite of what you wanted to happen, why would you cut rates? Why gamble it? Especially when you know ever since he cut rates back in September, inflation has gone up again. We're going to go over the CRB commodity index in a minute. And as of last week, it was very close to challenging multi-year highs. So inflation is on the rise. So on this news today, the US dollar broke down. Now, while that's good for the Dow Jones Industrial Average and exporters of U.S. manufactured goods, what it's not good for is the consumer. The consumer suffers. Why? It's because we import most of our manufactured goods. So what happens when the U.S. dollar declines? The cost of those goods goes up. Also, commodities go up. So the decline in the US dollar results in inflation simply by the fact that the dollar corrects. Your buying power gets reduced. So Jay Powell is in he's really in the catbird seat. He's in a pickle if he bends to the president. Now, in looking at what President Trump is looking at, he's looking at this. He's looking at, this is single-family houses sold in the United States. They hit their peak back here in 2005. That was just before the financial crisis. Never to have seen those levels again. We peaked out just the last time back here in 2020 when you had everybody fleeing the cities and moving to COVID-friendly states. And ever since then, we have seen a rollover on housing sales due to the fact that yields have gone up higher. Those folks that bought here on very low interest rates, they're not giving up those rates because house prices have gone higher since back here. So they're going to have to give up their mortgage rate, buy a more expensive house, unless they're downsizing, and pay more in borrowing costs. Why? Why do it? So Trump knows he's got to get yields down to get people out of their homes. So they'll move to other areas or downsize. He doesn't care. The reason for that, and I've gone over this in the past, but it's worth repeating. This is the macro. This is the chessboard. He needs houses to be sold. Why? To stimulate the economy. What happens when people buy a new home? Well, they buy paint. They buy washers and dryers. They buy goods, mostly Chinese junk, but it's trade. You have commerce that takes place. People are put back to work. That's what he's looking at. The problem is that this is the reality of the home buyer. People don't feel like buying houses. This is horrific. We are at all-time lows in terms of sentiment by potential home buyers, and you can't blame them. Wages are not keeping up with inflation, real inflation, not the numbers that they feed us. Interest rates have only gone up by 100 basis points, while the Federal Reserve has cut by 100 basis points. Remember, mortgage yields are based upon long-term debt, 30-year debt, not based upon short-term debt. And here's the other problem. The U.S. credit card debt is up $51 billion over the last year to a record $1.09 trillion. This brings total credit card debt up $344 billion over the last 4 years. The average interest rate on this debt has reached 22%, near an all-time high, according to the Fed. In effect, U.S. households now hold a record average credit card balance of $10,563. Even worse, this does not include, here we go, buy now, pay never. Affirm, those companies, which saw a record $19 billion in holiday purchases in 2024. Americans are fighting inflation with debt. And this is a snowball. They're making minimum payments. Heck, on buy now, pay never, they're not even making payments. So the snowball effect of this debt accruing is monumental. So you should expect at some point in time for there to be a summit with the president and these banks, and them having to drive down these rates on consumers, thus freeing them up to either A, pay down debt, or B, to take on more credit card debt. One of the two or both. Jody, welcome. Let's talk about yields, not yields. Let's talk about the Shiller PE multiple. All right, so we are above the October 2021 highs with a read of 38.59. I've reported this on Thursday nights before that we were above the October 2021 high in terms of valuations for the market. But by the end of business on Friday, we pulled back. And we haven't closed on a weekly basis above that resistance level. And we are one tick above the all-time high. So we'll see whether or not we break through it and close above it tomorrow. And after that, you got to worry about the April 2000 highs of 41.96. We live in interesting times. So this is inflation in the equity market. This is inflation in the commodity market. We're down on the week, but we are not broken. The trend is clear. It's defined. It is up. Commodity prices want to move up higher longer term. Now, oil took a break today because the president was pounding the Saudis to cut prices, and they may capitulate. So right now we're catching a reprieve on Commodities, I do not expect it to last very much longer. This is a strong chart. If you want an even more powerful chart, take a look. Do I have an annotated? Yeah, I do. Take a look at the longer term breakout here on the CRB commodity index. I mean, this is a monster chart. Very, very powerful chart. Monthly time frame. So in light of the president's slamming of the Federal Reserve, what do market participants expect from the Federal Reserve? Let's do a refresh because this changes frequently. It went from 0.5% probability of a cut in January to 0. March, 27%. May, still below 50. June, unch. It had zero effect on market participants' expectations of Fed rate cuts. But what did the stock market do today? It reversed to rally, and to rally to multi-year highs in terms of valuations, new all-time highs in terms of the S&P 500. So what's the Federal Reserve going to do? They're in the beginning of a political firestorm. Powell's lived through this. He left unscathed the last time. What does he do? If he comes out and he says, you know what, we're going to cut rates again, even though inflation's still moving up higher, the stock market may move up higher, but as inflation begins to really begin to rip up higher, especially with the dollar declining, you're going to see the stock market say there's something very, very wrong here. Very, very wrong. This is not going to end well. He's going to have to do a stealth end run around Wall Street and Main Street. The smarter folks on Wall Street will understand what he's doing. So ultimately, what's going to have to happen is this: is that, and I've talked about this before. The reason why I'm reiterating it is because I want to reiterate it because I see it coming. This is what has to happen: is that if rate cuts, going back to this chart here, if the short-term rate cuts forced an increase in longer-term rates, then he can't cut rates. What he's got to do is he needs to be the buyer of last resort. He's got authorization by Congress to go into the markets and to begin to buy 10-year, 20-year, 30-year paper. Mortgage-backed securities takes interest rates on mortgages lower. What happens? The housing market picks back up. What happens? GDP expands. The problem is it's a show. It's a show, and unless we get manufacturing jobs here, building stuff to send offshore, it may last the duration of the Trump presidency, but it's not a legacy that's going to be one that I would want, because it'll be an economy, a GDP built on debt, just as Biden's economy was built on debt. It's fictitious. Let's talk a little bit about crude. Oil prices are moving lower this morning. This is as of this morning, extending a multi-day slump. Yes. Following comments from President Trump to Davos that he will push Saudi Arabia and OPEC to lower oil prices. Now, we're short of the energy stocks only because they got extended. We were long, now we're short. I don't know what this does to energy stocks here in the United States except for depress them. So we have oil prices moving lower. We are one of the highest cost producers of oil in the world. The Saudis are one of the lowest, if not the lowest. So if anything, the Saudi oil companies are going to produce more, and we're going to produce less because oil's too cheap. So I don't like the energy patch right now until we get some clarity around what West Texas Intermediate crude does. Right now it's going down. We'll see what happens in the coming days. So this is a little bit of a reprieve in commodity prices. That's why you're seeing the CRB commodity index down this week. Now, here's a problem. Total U.S. crude stockpiles dropped to their lowest since March of 2022, and the seasonally lowest since 2015. So we have very little stockpiles, yet oil is declining, and it's been declining. It's not just a Trump thing. So the question is it demand? Is that the problem? Crude production remains near record highs. And to be fair to Biden, while he banned drilling in many areas, offshore, onshore, federal lands, we did continue to produce a lot of crude. So don't believe the politics that he wasn't allowing for crude to get pumped. We were, just not as much as we could have to keep oil prices lower. West Texas Intermediate crude was trading down around $74.50 ahead of inventory data and ticked up very lightly. I have a little bit of a typo there, Bloomberg. Up very slightly on the crude draw. Oil markets are now facing the introduction of a new variable this year. That is the Trump call option on energy prices. Really? Is it a call option? I don't think so. If you're asking OPEC to cut prices, how is that a call option? It sounds to me more of a put option, to be honest with you. He wants lower prices. So I don't agree with this at all. This is Frank Moncamp, head of macro trading at Buffalo Bayou Commodities. I don't agree with that. I think Trump is putting more of a put option on the oil markets. Look no further than oil prices. Oil prices are declining with stocks at multi-year lows on a seasonally and an unseasonally adjusted basis. More on the new Trump administration and their executive orders. Crypto rips as Trump signs EO creating President's Working Group on Digital Assets Markets. Folks, I'm not that smart when it comes to this stuff. I look at this and I say to myself, I'm not going to read all this. Maybe I'll put it into ChatGPT, summarize it, and I'll read it later on. What I want to do is I want to take a look at the chart. So let's take a look at the chart. What did the price of Bitcoin do on the news? Well, we were down, but we rallied to close positive. I think that we are getting ready for a new rally here. Not a rally. We're already in a rally. A breakout on Bitcoin. Take a look at your momentum indicators. Volume, awesome. To be fair, though, a lot of that was selling, and we got bid off the lows of the session. So it wasn't net accumulation today. We did not close at the highs of the day. So we need to rationalize what this volume is telling us. It's telling us there's a lot of indecision out there about Bitcoin. I remain bullish. And what I'm also going to take a look at when I am divining what Bitcoin is going to do, I want to take a look at Coinbase. Coinbase, heavily correlated to Bitcoin. It's consolidating as well, was higher on the day. Traded lower, but ultimately closed up on the day fractionally. Bullish on crypto. Let's talk a little bit about, let's go to comments, and we'll go to the weekly charts. We already went over this. TZ Burton. Bob, well, thank you, sir. Let me glow in that very, very thoughtful comment. I appreciate that very much. George Gammon is going ballistic on Trump's meme coins. I agree with George, but the fine print on Trump's coin says This is not financial advice. I'm very, very surprised. I haven't listened to George on this topic. Frankly, I haven't even looked at the price of a Trump coin. I don't. Let's just say, on the face of it, if I understand the value of a Trump coin, then I may change my tune. Right now, I don't like it. I don't like the timing of it. Uh, it seems like a little bit of profiteering, and I'm very, very how do you say, critical of the Democrats and what they do, and the Republicans. To be fair, we're not going to carry water for anybody, not one individual, when it comes down to their policies and having a what's the word, having a an agenda. Now, our agenda here is to make money. Our agenda here is to see what these guys are doing, appreciate the fact that there are no angels in Washington. It's just a matter of how much less demonic are they to the Main Street people. That's all I care about. Are they market friendly? So I think it was not that he cares. He doesn't care. He's the president of the United States, and he's not going to run for re-election again. So I don't think that it was a wise idea. I think Trump has 80%. It is not supposed to be a pump and dump. That would be an absolute disaster. And that could be why you're seeing Bitcoin stall out here a little bit. I think that Bitcoin would be a lot higher. It was down over $2,000 today. It rallied back, but it was down big. We did the Fed Watch tool. Let's talk about bullishness in the equity markets. So we reached a point where there was a lot of doom and gloom. What you're looking at here is a sentiment indicator. And when you get a lot of bearishness, you get bullish on the market because all the people that thought that the stocks were only going to go up, they got scared. And that's when you want to buy stocks. And then when you get a little bit frothy, well, we're not frothy yet, but we're getting up there. Equities could still move up higher. But once we get up and into this range, it can happen quickly. You got to start getting worried about the market. And keep in mind what's happening out there. There is a massive, and we don't even know everything. We know 0.01% of everything that's going on behind the scenes right now in Washington. So what we know is that we have a president that loves lower interest rates because he's a real estate guy. How does he get them? And that's the battle that's taking place right now. The question is, if we get them and inflation moves up higher, then what happens to the equity markets? So it's a problem. Who stand to suffer the most through this are the people that own no assets. And those are the people that voted for President Trump. So he runs the risk of the folks that would normally have voted Democrat going back generations. He runs the risk of alienating them. And that's why I think he's talking about cutting back on the SALT tax increases he imposed on New York. My taxes went up under Trump. California, all the high tax states, they limited the amount of deductions you could take. So he's looking to take that back. And so I think that what he's doing 4D chess. He's getting ready for high inflation. He's going to offset it with lower taxes. Okay, moving on. Yield curve. So I mentioned this earlier to members that the yield curve, while it was down most of the week, and it skyrocketed up today. We were down in the week as of last night. As of today, we are now higher. No weekly higher highs. One trading day left to go. And here's the monthly view. We're right in the middle of the red zone. Bad things tend to happen in the red zone. Oil here, breaking out. on a weekly chart. Even though we're down, oil is breaking out. Treasury bonds finding support. Natty gas pulled back a little bit on the week so far. Gold is setting up for a major breakout here. And I mentioned on Sunday Night Futures Live that we may have a double top weekly chart on the S&P 500, to a lesser extent on gold. But as it stands right now, S&P 500 new all-time record highs. This is a monthly chart. We're going to need to see how the month closes out. Do we close at new monthly highs or do we fade? Because there still could be a double top, and the same thing with gold. It depends upon how we close out the month. We have a few trading days left to go. Stay tuned. Here's the TLT, the bond prices, my worst performing position, down on the week so far. Yields up on the week. Tips, Treasury inflation protected securities, dollar down. This is a problem. So people are going in, they are buying tips to protect against inflation. The dollar we already went over, it broke down on a weekly time frame. Euro, one trading day left to go, but the euro is poised to close above major resistance. And as for the yen is up on the week, no major breakout. This could cause a problem for equities if we get a major breakout on the Japanese yen, because it impacts the yen carry trade. Borrowing yen, cheap, buy stuff in the West and get paid the arbitrage on the spread. If yields go up and yen goes up in Japan, that trade becomes much less attractive, much more risky. Therefore, markets can come under pressure here and in Europe. Volatility, smash this week, one trading day left to go. Dow Transports, continuation breakout on the week. Volume should roll in about average. Dow Jones Industrial Average. We're poised to take out all-time record highs. Here's a problem. Daily view. We are kissing, or just shy of kissing, the third standard deviation Bollinger Band. We came close back here, correction. We hit it back here, correction. We hit it back here, correction. So if you're thinking about chasing the Dow Jones Industrial Average right now, remember this chart. If you're not familiar with what the third standard deviation Bollinger Band is, it's a one deviation beyond your standard out-of-the-box Bollinger Bands. In short, I'll save you the technical jargon. We're not supposed to be here on a relative basis. Expect a pause, expect a pullback, and we could continue up higher after that pressure is alleviated. Do not chase the Dow Jones right now. Now, the S&P 500 is broken out to new all-time record highs. Take note of money flow. Money flow is down. Volume, horrible. Granted, an abbreviated week, but still horrible. Daily chart. We're extended, overbought. On Stokes, I was asked today, would I short the S&P 500 here? The answer is no. And the reason is that we could remain overbought for a while. We did the same back here. We did it back here. We did it back here. Did it back here. I don't see the signal by the market saying short me right now. The other reason why is that we have what you call clear blue skies. What does that mean? It means that you have no overhead supply. You have no prior bag holders looking to get made whole. So it's very easy for the machines to keep the market moving higher, even though volume is horrific. Why? There are no sellers. Let's see how they close this out on the day. And we do this to identify where we may be opening the next day. And man, money moved in to the S&P 500. Don't be surprised to get a pullback tomorrow morning. They really closed us extended here intraday. Careful. Now, is this an equal weighted rally? Meaning SPY, weekly time frame, we are up on the week, a little over 2%. So we want to take a look at the RSP, which is the equal weighted basket, and say, okay, do we have a concentrated rally or do we have a broad base rally? The answer, it's a concentrated rally. We're up only 1.28%, still respectable, but concentrated in a few stocks. That makes the markets a bit more vulnerable. Trip Qs, they're probably breaking out to all-time highs. Why? We're in silly season, earnings season, and we get a lot of the triple Q names reporting next week, so buckle up. Now, I'll be looking for an area to add to short positions here. We're playing the long game. I'll stay long of this market, but on the way up, knowing what we're looking at in terms of the yield curve, look at this. We're about to retest a breakdown point on the triple Qs. Man, I'm telling you right now, I made this red for a reason. We close down and close. If we close below 500 on the triple Qs, that's a double top. Very thin volume. Let's go daily view here. All indications are that it wants to move up higher. Volume thin. Let's go to that 30-minute view to see how they close this out. It looks like they painted the tape on the S&P 500. And it looks as though, not to a lesser extent, they did the same here on the triple Qs. The equal weighted Qs, very similar to the S&P 500 and the SPY and the equal weighted basket. The equal weighted stocks are underperforming the concentrated stocks. So again, we're back to that. Only a few stocks driving the equity markets up higher. Small caps, they did well today on rising yields. I was surprised. Mid caps, I don't have the mid caps up here. Let's bring up the mid caps. Very thin volume. Up day, though. Impressive that the small caps and mid caps were up with rising yields. The banks looking very strong, but very overbought. How's volume here? Not good. Technology looking very, very good. Very, very good. If we close here, there's no volume. Here's the daily view. A beautiful breakout, a gap up yesterday, closed right above our resistance level. Today, we touched it and we reversed off of it. I'll tell you right now, if this doesn't follow through to the upside tomorrow and we break below and close below the lows of yesterday, there's a lot of problems out there. So watch out for this. This must go up. Semis, continuation breakout. How's the volume? No volume. Software, breaking out. How's the volume? No volume. Biotechs, breaking out, pushing up the small caps. Staples, I wouldn't touch the staples right now. They're under a lot of pressure. Emerging markets, doing well. Dollar pulling back. Emerging markets will do well. Good environment to own those names. Plus, they're cheap. Emerging markets, ex-China, including China, doing very, very well. But this is a leveraged product. Let's bring up the EEM non-leveraged product. Up 1.38% versus 1.8. So ex-China doing well this week. That was not the case for last week. Energy. So energy, here's what I think is happening here. We broke out last week, obviously, above this resistance level. Now, it appears as though what we're doing is we are retesting the breakout point, which is natural. The problem is that you have oil, which is declining. And if it continues to decline, it's going to become difficult for oil stocks to break out higher. But to be fair, looking at this correlation of energy stocks relative to oil, USO is an oil ETF. TF Hatter, hello, brother. The correlation is not as tight as what it once was. That will not last. It does happen, but then they revert to the mean again. Let's take a look at oil on the week. We have energy down 1.87%. West Texas Intermediate crude down 2.29%. I mean, this is a bear. We're stuck in a range here. Energy stocks are cheap. It'll be interesting to see how the energy stocks close out the week. Gasoline prices on the week, they pulled back. All right. Let's close this out here. Natty gas prices, we're long of this. It's been so cold. You got to wonder how much of this polar vortex is fueling the, pardon the pun, fueling the price of natural gas. Just a thought. That's why I've been reluctant to roll up our short puts on Boyle. FLNG, we are long of FLNG. This is liquefied natural gas. This is getting ready for a monster breakout. How do I know? Let's try that again. How do I know? There we go. We're breaking out of a massive monthly wedge formation. We doubled up on this back at the lows of last month, and it's yielding us, well, it's yielding 11.61%. We're getting paid in the high 12s, 12% on our dividend. Gold. It's breaking out to new all-time highs. It's where it's going, especially with the dollar pulling back. Gold stocks, we'll leave it off here, then we'll go to chart requests. I was nibbling a few weeks ago. Here's what I see here. All right. So if people wonder why I pause and I make funny faces, even though the stock looks up and they don't understand why, in my mind, I look at this in two ways. One, here's one. We broke out on the week. Okay. But if you're worried about your risk, you want to take a look at it from the bear side as well. Is this sustainable? Is this going to result in another breakdown? We don't know. What I need to see here on a weekly time frame is a pullback and a higher low get put in on the gold mining stocks. They are cheap. I want to buy more. I just don't want to buy into resistance. Therefore, we will wait until we get the higher low weekly time frame. Gold is a diamond breakout. Look at you, the fancy terminology. How dare you interrupt my show with your diamond breakouts? TF Hatter, maybe the volume is not present because I factor that in when I take a look at the volume bars. I do. I usually say it's an abbreviated week, but this week's volume is just like it's 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 not going to close above average. It's just not. So what else? Partial week with the options change, normal trading week next week. Yeah. Oh yeah, big week next week. Earnings week. Yep. Yes, sir. All right, let's do some chart requests. Before we do that, let's head over to the futures. I want to see how the futures are responding to Texas Instruments earnings. And this is the NQ. This is the NASDAQ 100, the futures version of the NASDAQ 100. We're down, but I could see us easily moving up higher here. This is a 15-minute chart. We'll just create some alerts here. Okay. I just want to check in with oil. IAU is a good play. I agree. Thank you, Bob. Always much respect for me. Thank you. Thank you very much. It's my honor. Thank you for being here and spending your precious time with me. I really, believe me, folks, I don't say it enough. I truly appreciate it. Thank you very much. I'm blessed. So thank you very much for the time you spend with me. Oil down another near half percentage point at the open here. We're about an hour into the new trading day. To be fair, it's thin volume. Let's see what the XLE is doing after hours. Very thinly traded. Probably not doing much. Yeah, not doing much. Okay, let's do some chart requests. Okay. Again, folks, if you're just joining in or you joined in late, head on over to our public forum. I will post the link. Join up. Put your symbols on the feed. Excuse me. And we'll do some chart requests. I only have 3 to do right now, so we have a little bit of time. As a matter of fact, we'll do for TF Hatter. TF Hatter's been around for, I don't know, as far as I can remember doing these shows, I remember TF Hatter, TZ Burton, a lot of the names. It's amazing. Really is amazing how you build Corey, long time, Sean, long time, George over the past few months, but he's really becoming a staple pretty quick. That's that Quebec food, the Quebec attitude. So that allows him to fit in very easily. I posted that link if you want to sign up. It's free, no credit card required. All right, let's write this down. And folks, we're going to be using our friends over at TrendSpider, automated technical analysis. I will be demonstrating, and if you want Nancy Pelosi's picks and congressional picks, it's included. Don't go buying a separate service. You get it free with TrendSpider. $35% discount, bare minimum below, and you get it for free with my silver and gold level membership. Join up now. Let's get to it because my voice is going. I can't even get workers' comp for my voice. CYBN. BN. All right. Weekly chart. Uh, let me say it this way. Awesome. Awesome. Let me put it into more technical terms. This stock is about to explode. I repeat, this stock is about to explode. I need to do something. Whose was this? Who brought this to my attention? Sean, absolute genius. Let's bring this up. I want to see what the heck we're dealing with here in terms of fundamentals. Biotech, be careful. All right, so it's not making money. There's no edge um, vis-a-vis fundamentals. But the other thing you want to do is identify whether or not you have an edge in terms of short interest. No. You have less than 2 days worth of shorts to get covered. All right, so that's out of the way. Now let's talk about the technicals of CYBN. You have a massive Bollinger Band squeeze setting up here on a weekly time frame. Let's see what the insiders are doing. No insider trades. Let's check out the seasonality. We're just looking for an edge right now. Who's doing what? Is this the time of the year to buy? It's only got 3 years worth of data. That's no bueno. We can't use that yet. Do we have options? We have options. Do we have any unusual options activity? They're buying the May 10 strike. We're above that. Those are in the money now. That was as of January 10. So somebody's out there buying near term right here. Longer term, almost leaps. They spent about 40 grand on those premiums, betting that the stock is going to go up. So a Bollinger Band squeeze, what you're looking at here, if you're wondering what I'm talking about, is when you have the Bollinger Bands in red on their channels. Now, the fact that we had been in a bear market and the fact that we are now trading sideways and have a long base leads me to believe that this is going to get resolved up, because all the sellers back here are gone. Now, the other thing that I like about this is let's overlay the support and resistance levels. This is the first time I'm ever looking at this chart. I did not draw these trend lines. This is the algorithm. Boom. So what the algorithm is telling you is that it hit support back here in September, rallied up to resistance, reverted to the mean, right around the 20-period moving average, and this week we just popped our head back above it. I think that this is a screaming buy. I wouldn't wait for the breakout. I would add more on the breakout, but I would be a buyer probably tomorrow. Daily chart. Look at this. Daily chart. We broke out yesterday on any pullback and a retest. Show me a 9 handle. I'm a buyer. So what I'm going to do here, I'm going to create an alert. Keep a little bit of sensitivity. Our alert is set. we now forget. Momentum as measured by Stokes moving up. Higher lows. 4-hour view. Good here. Any pullback is to be bought. I think it goes higher. Miser, that is CYBN. Okay. Somebody may have posted one in the forum. Jody, Apple. Okay. All right. So bullish on CYBN. Very, very bullish. I like it. It's a biotech. So, speculative money only. Path. Wrong symbol. Let's get these off. Let's go to the weekly view first. Another one. Really nice setup here. Bollinger Band squeeze. I do know this company. I've heard of it. Come on. Killing me. What the heck is going on here? Jesus Christ. I feel like I'm on AOL days with the dial-up on the phone. Okay. What the heck is this? I have no data here. Here it is. Okay. No edge on fundamentals. It's under accumulation. It's got a B plus. Group strength is good. Only 4 years worth of data. Can't use seasonality. Let's see what the insiders are doing. You got some insiders selling. Let's go to the director level. Officers. This guy Gupta looks like he's on a scheduled sale. Romani, same thing. So you can't read too much into that. All right. So what's this company doing right now? Let's overlay the trend lines. We don't have any. We need to make our own. We're breaking out on the week so far. Bullish. Daily view. We broke out today. We're going to do a retest probably as soon as tomorrow. While this company does not have good fundamentals, I would not own it into earnings. I don't even know when earnings are. When are earnings? 312. We have time for a rally. We'll create an alert. That's too much sensitivity. Let's bring that down a bit. There we go. Good. Bullish. I think it's breaking out. JBL. All right. So I'm looking to short JBL. Now, to be fair, I want to show everybody something, and that's that RSI is all the way up here in the high 80s. So it's very, very overbought. I don't use the stochastics in this environment. We'll take those off. What we do use is RSI, and then we use resistance. This is the value of the algorithm. So resistance level number 1 right here, 174.65. Number 2, 181.03. Number 3, 191.66. They don't report for a while, so I would not go shorting right now. I think the path of least resistance remains higher, so I would not go shorting. I am watching it, though, very, very carefully with resistance levels above. I will be sending out alerts when we do begin bear operations. It will not be tomorrow, especially after the fact that we broke out on Wednesday, retested today, and then we did a reversal bar. If anything short term, this is a buy. I would not short this stock yet. That's the operative word, yet. Apple. I don't like this company. They don't innovate anymore. I mean, it's pulled back to a support level. Let's get away from my opinions on the company. They pulled back to a support level. They tried to rally it this week up and into those white lines, which is resistance. It was rejected. We're currently trading lower. Would I buy here in advance of earnings? No, definitely not. I would wait until after earnings and see how it plays out. It's not worth the risk of initiating a new trade right now. Let's go daily view. I mean, every time it rallies, it gets rejected. It's the path of least resistance right now is lower on Apple. It's just not participating. I don't like it. Let's see what is happening in terms of seasonality. Once we get into February, after earnings, I would start looking at it for the next few months as a bullish trade. If earnings come out positive, they come out negative, then forget about seasonality. Any insider activity? They're selling. I haven't gone through all of these. I don't know if these are scheduled sales, but you're seeing a lot more selling and no buying. So be careful here on Apple. And with that, folks, thanks for being here. Like, subscribe. You know the deal. Don't forget about TrendSpider. Get a bare minimum 35% discount code using my link below on YouTube, above on Twitter. Sign up for the 14-day free trial offer to the Contrarian Trader. Get it for free. I'll talk to you soon. Have an awesome trading day tomorrow and a great weekend. Be well.